Silver is making headlines again, and this latest move has caught almost everyone by surprise. The precious metals market is suddenly moving in a way that feels completely different from what investors have been used to over the past few years. Silver is surging aggressively higher, while gold is struggling to keep pace, and that unusual divergence is now becoming one of the biggest talking points across the financial world. Traders, analysts, and long-term stackers are all asking the same question right now. Is this finally the beginning of silver's explosive breakout phase that many investors have been waiting years to see? The market opened with another powerful move higher for silver, and the momentum throughout the session has been difficult to ignore. Prices climbed rapidly as buyers continued pouring into the market despite a stronger U.S. dollar and rising expectations of future interest rate hikes. Normally, those conditions would place heavy pressure on precious metals. In most market cycles, when the dollar strengthens and interest rates are expected to rise, gold and silver tend to weaken because investors move toward cash and higher-yielding assets. But that traditional relationship is starting to break apart, and silver appears to be trading on an entirely different set of fundamentals now. What makes this rally so fascinating is that gold is actually moving lower while silver continues climbing. Usually these two metals trade together almost like siblings. Gold moves up, silver follows. Gold falls, silver weakens even more. But today the market is showing a rare disconnect. Gold slipped lower while silver surged several percent in a single session. That kind of price action tends to grab attention because it suggests there may be something much larger happening underneath the surface of the market. The gold to silver ratio is now collapsing rapidly, and that is one of the clearest signs of silver outperforming gold. For years, silver investors have watched this ratio carefully because it helps measure relative value between the two metals. When the ratio is extremely high, silver is often considered undervalued compared to gold. When the ratio falls sharply, it means silver is gaining strength at a much faster pace. Right now, that ratio is approaching levels that many traders consider critical. Some investors are already preparing to convert portions of their silver holdings into gold if the ratio continues dropping further. Historically, these cycles have created enormous opportunities for precious metals investors who understand how the ratio behaves over long periods of time. During major silver bull markets, the ratio can collapse incredibly fast, especially when retail demand, industrial demand, and investment demand all begin accelerating simultaneously. At the same time, something even stranger is happening in the broader financial system. The U.S. dollar index has been strengthening throughout the week, and silver is still rallying aggressively. That combination almost never happens. A stronger dollar typically pushes commodity prices lower because it makes them more expensive for foreign buyers. Yet silver appears to be ignoring those traditional pressures completely. This tells many analysts that physical demand may now be overpowering the normal macroeconomic forces that usually control price movements. Oil prices are also staying elevated, adding even more inflationary pressure across the global economy. Energy costs continue feeding into transportation, manufacturing, food production, and consumer goods. Brent crude remaining above $100 per barrel is creating a situation where inflation becomes much harder for central banks to control. Consumers are already feeling the pressure every time they fill up their gas tanks or shop for basic necessities. Then came the latest inflation reports, and the numbers were hotter than expected once again. Consumer inflation jumped to levels not seen in years, reinforcing fears that the inflation problem is far from over. Central banks had spent months trying to convince markets that inflation was under control and that rate cuts would eventually arrive. But these latest reports completely changed the conversation. Consumer price inflation came in significantly above the central bank's target level, and producer inflation surged even higher. Producer prices are especially important because they often indicate future inflation pressure that eventually gets passed on to consumers. When businesses pay more for raw materials, transportation, and manufacturing, those costs eventually show up in everyday prices across the economy. The Producer Price Index shocked analysts by rising far above expectations. Core inflation measures also accelerated, signaling that inflation pressures are broadening beyond energy and food. This is creating serious concerns inside financial markets because it raises the possibility that central banks may have to keep rates higher for much longer than investors expected. In fact, market expectations have now shifted dramatically. Instead of discussing future rate cuts, traders are increasingly beginning to price in the possibility of additional rate hikes. That is a massive reversal compared to just a few months ago. Financial markets had largely convinced themselves that the tightening cycle was finished. Now that assumption is being challenged. What makes silver's rally even more remarkable is that higher rates are traditionally considered bearish for precious metals. Gold and silver do not pay interest, so when bond yields rise, investors often move away from metals. Yet silver continues pushing higher despite these headwinds. That suggests other forces are overwhelming the traditional macro environment. One of the biggest stories unfolding right now involves China's record-breaking silver imports. The latest data stunned analysts because China imported more silver than at any point in recent history. The charts show an enormous spike in physical silver flowing into the country, and many market observers believe this could represent a major turning point for the global silver market. The scale of these imports is difficult to ignore. China is already one of the largest industrial economies in the world and consumes massive quantities of silver for manufacturing solar panels, electronics, batteries, and advanced technologies. But this recent surge appears far larger than normal industrial demand alone would suggest. That is why speculation is now growing that China may be strategically accumulating silver in anticipation of future shortages or significantly higher prices. Some analysts believe governments and large institutions may understand something about the future supply-demand imbalance that retail investors are only beginning to notice. Silver has a unique position compared to gold because it functions both as a precious metal and as a critical industrial commodity. Modern technologies require enormous amounts of silver due to its unmatched conductivity and efficiency. Solar energy infrastructure alone has become one of the largest drivers of silver demand globally. As countries continue expanding renewable energy projects, silver consumption could rise dramatically over the next decade. At the same time, silver supply growth has struggled to keep pace. Unlike gold, much of the world's silver production comes as a byproduct of mining for other metals like copper, lead, and zinc. That means silver supply cannot easily ramp up just because prices rise. New mining projects also take years to develop, creating the potential for prolonged supply shortages if demand accelerates too quickly. Many investors are now wondering whether China is preparing for exactly that scenario. If governments or central banks begin aggressively accumulating physical silver, the available supply on global markets could tighten rapidly. That possibility is now becoming one of the hottest debates among precious metals analysts. Another major development came from India, one of the world's largest precious metals markets. The government recently raised tariffs on gold and silver imports dramatically in an effort to defend its currency. The increase shocked many traders because India plays such an important role in global bullion demand. For generations, gold and silver ownership has been deeply embedded in Indian culture. Families often purchase precious metals for weddings, savings, celebrations, and long-term wealth preservation. Any major change in Indian import policy can have enormous effects on global markets. The government's decision to sharply increase tariffs suggests officials are becoming increasingly concerned about currency weakness and capital outflows. Higher import taxes are designed to reduce demand for foreign bullion purchases, but they may also create unintended consequences. Domestic prices for gold and silver inside India are likely to rise significantly, potentially encouraging smuggling or shifting consumer behavior in unpredictable ways. What makes the situation even more extraordinary is that officials reportedly encourage citizens to reduce gold purchases entirely for a period of time. That kind of request highlights just how serious currency concerns may have become behind the scenes. Meanwhile, another development has started attracting attention from analysts worldwide. Reports that Russia may be quietly building a major silver reserve. Data remains limited, but several reports suggest the Russian central bank has begun adding silver to state reserves for the first time. If true, this could become a historic shift in the global silver market. Central banks traditionally focus heavily on gold reserves, but silver has rarely been accumulated at the same scale in modern times. A move towards silver accumulation by central banks could fundamentally alter the supply-demand dynamics of the market. Some analysts believe Russia's actions could encourage allied nations or other emerging economies to follow the same strategy. If multiple governments begin competing for physical silver, available supplies could tighten dramatically. The market for silver is much smaller than the gold market, meaning relatively modest increases in institutional demand can create outsized price moves. This possibility is why some investors believe the current rally may still be in its early stages. Once institutional momentum begins, commodity bull markets can accelerate far faster than most people expect. Silver, in particular, has a history of explosive moves due to its relatively small market size and high volatility. Several market analysts are now openly discussing the possibility of triple-digit silver prices. While such forecasts sound extreme to many casual observers, supporters argue that the combination of inflation, industrial demand, geopolitical uncertainty, and institutional accumulation could create conditions for a historic price surge. Technical analysts are also watching the charts closely. Silver recently broke above several important resistance levels, triggering additional momentum buying from traders and algorithms. Once strong resistance levels are broken, markets can sometimes enter rapid price discovery phases where momentum feeds on itself. Social media platforms and financial communities are now flooded with discussions about potential price targets. Some analysts believe silver could test $100 much sooner than expected if current momentum continues. Others argue that short squeezes and supply shortages could push prices even higher over the longer term. The emotional aspect of the silver market is also becoming increasingly noticeable. Precious metals investing often attracts passionate communities because many investors see gold and silver not just as commodities, but as protection against inflation, currency debasement, and financial instability. Rising government debt levels and continued money printing have strengthened those beliefs significantly over recent years. Many long-term silver holders argue that the metal has remained undervalued for decades compared to monetary expansion and inflation. They believe current prices still fail to reflect silver's true scarcity and strategic importance within the global economy. One interesting way analysts sometimes measure silver's purchasing power is by comparing it to everyday goods over long periods of time. Fast food prices, housing, gasoline, and consumer products all help illustrate how inflation erodes currency value over decades. Historical comparisons show that silver has significantly outperformed inflation across long time periods despite experiencing major volatility along the way. Decades ago, an ounce of silver purchased only a few inexpensive meals. During major silver rallies, that same ounce could purchase dramatically more goods and services. These comparisons are now resurfacing as inflation pressures intensify again. Consumers are noticing rising prices everywhere, from groceries to restaurants to energy bills. Many investors see precious metals as one of the few assets capable of preserving purchasing power during prolonged inflationary cycles. The speed of silver's recent rally has been especially impressive. Just days ago, prices were significantly lower, and since then the market has climbed relentlessly higher almost every session. That kind of sustained upward momentum tends to attract additional attention from traders who fear missing out on further gains. At the same time, volatility remains extremely high. Silver is known for dramatic price swings in both directions, and rapid rallies are often followed by sharp pullbacks. That creates an emotional environment where excitement and fear can dominate market psychology. Some traders believe the market may be entering a speculative frenzy phase, while others argue the rally is still fundamentally justified based on supply shortages and inflation concerns. Regardless of which side ultimately proves correct, one thing is clear. Silver has become one of the most closely watched markets in the financial world right now. Investors are also paying attention to the broader geopolitical backdrop. Ongoing tensions in multiple regions continue increasing uncertainty throughout global markets. Historically, precious metals tend to benefit during periods of geopolitical instability because investors seek perceived safe haven assets. At the same time, industrial demand for silver keeps expanding due to technological growth. Electric vehicles, solar panels, semiconductor manufacturing, artificial intelligence infrastructure, and advanced electronics all require silver in varying amounts. As these industries expand globally, silver demand could continue climbing for years. This creates a rare situation where silver benefits from both safe haven demand and industrial demand simultaneously. Few commodities possess that dual role at the same scale. Gold primarily functions as a monetary metal, while industrial metals rely heavily on economic growth. Silver sits in the middle, allowing it to react to multiple powerful trends at once. That combination is one reason some analysts believe silver could outperform gold during certain phases of the current cycle. If inflation remains elevated while industrial demand accelerates, silver may continue attracting strong interest from both investors and manufacturers. Still, risks remain everywhere. Rising interest rates, economic slowdowns, stronger currencies, or sudden declines in industrial demand could all pressure prices. Precious metals markets are notoriously unpredictable in the short term, and sharp corrections can happen with little warning. But regardless of near-term volatility, the current silver rally has clearly captured global attention. Investors who ignored silver for years are suddenly paying attention again. Financial media outlets are covering the story daily. Analysts are revising forecasts higher. Online communities are exploding with speculation about where prices could go next. The most important thing may not even be the current price itself, but rather the speed at which sentiment is changing. Markets are heavily driven by psychology, and once momentum shifts, trends can accelerate rapidly. Right now, silver appears to be entering one of those moments where excitement, fear of missing out, inflation concerns, geopolitical tensions, industrial demand, and institutional accumulation are all colliding simultaneously. Whether this becomes the beginning of a historic bull market or simply another volatile chapter in silver's long history remains to be seen. But one thing is undeniable: the silver market is no longer quiet. The world is watching closely now, and every new price move is adding more fuel to the conversation. If current trends continue, the coming weeks could become some of the most important and volatile periods the silver market has experienced in years.